Hello. Sir, good afternoon.
Yeah, good afternoon, madam. Wait for a few minutes. Students will get joined. I think I am just posting some information there in a group. Okay.
Okay, sir. Good afternoon, students. Good afternoon, Monica. Monica. Today I'm going to explain about the adjustment entries. Here we have a adjustment. How can we make the adjustment in the journal entries. And the same thing, the treatment, how can you give in the trading account and the profit and loss account and balance sheet. So first adjustment I'm taking closing stock. Closing stock, we take the adjustment in the journal entry is stock account data. This is closing stock. We are talking about the closing stock. So journal entry adjustment will be taking about, usually we'll take the closing stock. So closing stock account data to trading account. So this stock, closing stock always will be taking on a right side of in your trading account. So that will be buy. So why we are taking this one trading account? Because we are posting stock account. It is a closing account in trading account. That's why we are writing the adjustment like this. So in the treatment, how you'll give credited to trading account, this closing stock always will be credited to the trading account, and the same thing will be shown in the current assets in the balance sheet. Clear? Means this is the twice entry will be come. One is in the trading account, the other time it will comes in the asset side in balance sheet. Outstanding expenses. Outstanding expenses means the expenses which still you have to pay. Are you getting my point? So here, expenses account data to outstanding means the amount still you have to pay it. So the treatment, how you'll be writing this entry means where you'll have to post in the journal proper, we'll be writing like a journal entry that is expenses account data to outstanding. Specific means it may be the rent, it may be the salary, it may be the insurance, it may be anything that we'll be writing. The expense. What is expense? That is a specific account. That is a rent account data to outstanding. Means that still you have to pay the outstanding for the rent. So the treatment, how you'll be posting this one? First, you'll be added to specific expenses item in the trading account, or it may be the profit and loss account. Trading account means it will be the wages. To the wages, you will be adding the outstanding expenses. If it is in the trading account, that is the trading account, it may be the salary, it may be anything. That is the first we will be showing in the trading account or in the balance sheet. Again, this entry where you'll be taking twice. One is shown under current liabilities in the balance sheet. Means still you have to pay it. That's why you have to write on your left side, that is in the liability side in balance sheet. Next is prepaid expenses. Prepaid expenses is nothing but the expenses which you got in advance. That you have got in advance. So that you will be writing as a prepaid expenses account data to expenses. That is a specific. Prepaid expenses is, it may be the insurance, anything it may be. So that amount you are getting in advance. So that's why we are writing first you will be deduct. Prepaid means in advance you got. So that's why you have to minus it. And first you have to deduct from the specific expenses item in trading, or it may be in the profit and loss account. And next time you have to show that in the current assets in a balance sheet. Means that is you have got the in advance you are getting. You are expected in some years after that you are getting in advance. So that will be shown in the asset side of the balance sheet. If it is outstanding, you will be showing in a balance sheet, that is in the liability side. If it is a prepaid expenses, that you will be showing on a asset side in the balance sheet. And next is a depreciation. Depreciation means that asset that is a depreciated. So machinery, or it may be the furniture, it may be any tools, it may be anything for which the depreciation is made. Depreciation account data to specific. So that it may be the machinery, or it may be the house, it may be the furniture, it may be the motor car. Like that, you will be you are doing the depreciation. Or fund you are taking in a trading account, and profit and loss account data to depreciation. So the depreciation you will be writing on a debit side of a profit and loss account. So that is a debited to profit and loss account. You will be writing on the debit side in the profit and loss account, shown as a deduction from the balance of specific asset. So shown, you will be showing the deduction. That is from the, suppose your rent amount it is given. So what will be the depreciation amount? Only the depreciation amount you will be writing in a profit and loss account. The whole amount you will be not writing. Suppose you have a furniture account, it is a 10,000 rupees. On that, you have to depreciation at the rate of 10%. Means 10,000 at the rate of 10%, it is 1,000 rupees. That 1,000 rupees you will be writing in a profit and loss account. That is on a debit side. Again, when you're coming to the balance sheet, from the furniture, the total amount you'll be writing the 10,000 rupees less depreciation 1,000. That is 10,000 minus 1,000 rupees. 9,000 you'll be writing in a outer column. That is on a asset side in the balance sheet. Next, further increase in a bad debts means in addition to the already it is booked existing bad debts, means you will be writing. So that is profit and loss account data to bad debts. So you will be writing this bad debts in the profit and loss account, that is on the debit side. So how you will be writing this one? Debited to P&L account in addition to the existing already it is existing, means this you will be writing, that is to bad debts account. And next, showing as deduction from the balance of sundry data. Whatever the existing bad debts you will be writing, you are given that existed balance, that is bad debts, you will be deducting from the sundry debtors. That is, if it is a debtors amount is a 45,000 and your bad debts amount is a 2,000. So that amount you will be deducting from balance, that is a sundry debtors, that is on a current assets in balance sheet. Next, provision for bad debts. This one, provision for bad debts, you will be writing profit and loss account data to provision for bad debts. So this one is a provision for bad debts account. You will be writing on a debit side in a profit and loss account. So how you will give the treatment? Debited to P&L account, that is in addition to the bad debts, with the total amount of the provision required. Means there will be provision also will be there, bad debts also will be given there. So in the provision for bad debts or the further increase in the bad debts, that is existed bad debts, so that also you have to deduct from the sundry debtors, that is under the current assets in balance sheet. In the provision for bad debts also, the same treatment you have to give. That is, you have to show as a deduction from the balance sheet of sundry debtors under current assets and balance sheet. Next, we'll be taking the provision for discount on debtors, where you will be getting a discount on a debtors. That one you will be writing as profit and loss account. Means why you are writing the profit and loss account? That is in the profit and loss account only you are writing, and you are writing on a debit side. That is a 2. 2, whenever you are coming, that is a 2, that will be on a debit side. Is it clear? Profit and loss account data to provision for discount on debtors account. Treatment is, the first point is, first you have to debit it to, that you have to debit it to P&L account with the total amount of this provision required. And second point, the same as bad debts existed, provision for bad debts, how you are making the treatment, Here also you will be taking the same thing, that is shown as a deduction from the balance of the sundry debtors. Why we are taking as a sundry debtors means that is a provision you are giving for the debtors. If it is a creditors means you have to deduct from the creditors. So that is a deduction from the balance of the sundry debtors under current assets in balance sheet. You see here. Here it is a given the provision for discount. But next what it is given? A reserve for discount on creditors, where you are getting the reserve. So how you are writing? That is a creditor. That's why we have to write on the credit side. See here when you are writing provision for discount on debtors, provision profit and loss account data to provision. But it is in a creditors, that is reserve for discount on data to profit and loss account. That is on the credit side, that is on your right side of the P&L account, you have to write. And it should be credited to the P&L account with total amount, whatever the provision is required. The same thing shown as a deduction from the balance of sundry creditors. From the sundry creditors, that is under the current liabilities in balance sheet, you have to deduct it. Accrued income. This is a accrued income. It will also debited on a debit side in a P&L account. That is accrued income account data to income specific. It may be the salary, it may be the rent, or anything it can be. Accrued income. It's shown under the current assets. Directly, we are not writing anywhere in the profit and loss account. This accrued income always it should be shown in the current assets in the balance sheet. Is it clear? Pre-received income. That is income received in advance, where you are pre-received income. Accrued income it is there, means still anyhow you are going to get the amount. But here pre-received, before the time of the time, you are getting the amount. That is getting in the advance. Income, that is a specific account data to income received in advance. That you have to show under the current liabilities in balance sheet. So, depends upon this entries, that is adjustment entries, we'll see one question. The following, where it is appears in the trial balance of Ravindranath, that is draw from the books of accounts for the year ending, that is the 2018, that is 31st March, that is a closing. Wages are given 45,000, salaries are given 78, office rent paid it is 8,000, and adjustment expenses, advertisement expenses, it is 25,000. Later it is observed by him that the following adjustments were not given effect to in his books of accounts by his bookkeeper. Means these are the entries are directly disposed, but later they came to know there is an adjustment was not given effect in the accounts by his bookkeeper. Means here wages outstanding and unpaid. Wages are outstanding, means still you have to pay it. Means only this amount it is given, but this is an outstanding amount they have not written in their books, that is in the ledgers, they have not given any adjustment. Salaries prepaid. Yes, salaries they have given 78,000, but some amount, that is 6,000, they have paid in advance. Understood? Rent due but not paid. Rent due, that is also outstanding. Unrecorded and unpaid expenditure on advertisement, that is a 10,000 rupees. It is unrecorded. They have paid, means they have unpaid expenditure on advertisement, that is unrecorded. So here what you have to do, you are required to pass general entries, necessary general entries to keep effect to the adjustment items, and also show how these items would appear in the year-ending financial statement, that is trading account, profit and loss account, and the balance sheet. In this, first you have to show the general entries, Then same thing how you will be posting in a P&L account and the trading account and the balance sheet. We'll see. In this, they have given wages are outstanding. Means the wages are outstanding. Where you have to, that should be in a debit side. Means wages account data to outstanding wages. Means in the books of, that is in the ledger of wages, you will be not written that is a wages account data to outstanding wages. Means this to outstanding wages, you will be writing on a debit side in the wages book. And salaries are prepaid, means they have paid in advance. Prepaid account data to salaries. That is by. And rent is also outstanding. Rent account data to outstanding rent account. Advertisement where it is outstanding and it is not at all made the posting. Means still you have to pay the advertisement expenses. Now we'll see that how you will be writing in a P&L account. So your trading account and the profit and loss account. In trading account, two wages. Wages amount we have a 45,000 outstanding. Means still you have to pay it. That is a 5,000. And here it is a 50,000. Two salaries. Salaries are prepaid. Prepaid account data to salaries account. That is a 78,000. Means still you have to pay the amount. Prepaid salaries to salaries account. That is a two salaries are 78,000. Prepaid expenses are 6,000. Means in advance they have to pay. So 72,000. Rent is also outstanding. Rent is 8,000. Still you have to get the 4,000. It is outer column. It is a 12,000. To advertisement expenses. In the advertisement expenses, shown that you have not paid. It was not posted in the books of advertisement. That is 25,000. Still you have to pay the 10,000. It is a 35,000. These are the, like this, you have to post the adjustment entries. The same thing, how you will be writing in a balance sheet. In the balance sheet, that is on a liability side. Whatever the outstanding expenses, that will be coming under the current liabilities. Outstanding wages, you know, that is still only the amount you have read, not the 45,000. First, from the 45,000 you have added, means that you have to pay it. So 5,000 and total amount you will be showing in the profit and loss account or in the trading account. And only the outstanding amount, what is the outstanding amount? That is a 5,000 we are writing in a balance sheet. And the rent is also outstanding. Outstanding accounts, that is still you have to pay it. That is a liability. So outstanding expenses, you will be writing on the liabilities, and prepaid expenses that will be writing on a asset side. Here we have only the prepaid expenses, that is a 6,000. That is prepaid salaries you have, that you have written on a asset side. Next is the introduction to the company. Introduction to the company. So here first we'll see the what is the definition and what is the meaning of company. Here the term company, what is the meaning of company? So it has been coined by, it is derived from the Latin words, that is com and companies. It has derived two Latin words, com and panis, means which together it is a which means com means it is a together. Panis means bread. So which has given the meaning together bread. Companies. So by the term companies, it is thus understood, it is an association of a people who look who took their meals together. It is a meaning. That is that the term company has been coined. It has two, that is com and pennies. Two means com means that is a together. Pennies means it is a bread. Means it is understood that is association of people who come together and they have their meal together. And the other Professor Lewis Henry Annie, he has given in his definition, he is from the USA. He has given in a definition that a company, what is meaning the company? It is an artificial person. It is not the original person. It is not the, it is artificial, where you, some of the people, they cannot be seen, but the company will run. It is an artificial person created by law, having a separate entity with the perpetual succession and common seal. One company, it is an artificial person, and there is a board of members, and some are the directors, some are chairperson. Like we have this different designation. And in that working, some of the people are artificial, who cannot be seen, but they'll be on the rolls. And it is according to the law, where it is a separate entity. Every company have their separate entity. Now, separate entity, it is a different entity for that I'll be explaining you in the next. With the perpetual succession means it, where it will be coming and going also, the company will run with the common seal. For example, I'll say that nowadays we are seeing the share market. In the share market, why I'm telling the artificial person, the company is an artificial person. In the share market, I have purchased some of the shares. Then when I buy the shares from the particular company, I will become the creator of the company. I am the owner of the company. Is it clear? So then, if my company, from which company I have purchased the shares, that company is in a Mumbai. So I'm in Hyderabad. From Hyderabad to Mumbai, I can go daily and come back because I have purchased the shares. So I have purchased a share, then I become the owner. But I will not be going there. I'll be there in the nominal role. In the roles, I'll be there because I'm the owner. I'll also have a right to give a vote. I also can give the suggestion, but I'll not go direct every day to the company. So I'm the artificial person. So Lord Justice. So it is a artificial person that can be run. So Lord Justice Dinley, he defines a company. It is an association of many persons who can contribute money. Just now I told now the shares. Who can contribute a money or money's worth to a common stock and employed in some trade or in a business, and who share the profit and loss arises therefrom. The common stock so contribute is denoted in money and is the capital of the company. And a little share I'm investing, so that is the capital of the company. The person who contribute it or whom it pertain are members and contributing. Then I am the member of the company. The proportion of the capital to which each member is entitled is his shares. So where I am giving the proportion of capital, so on that I'm getting the shares. And the shares are always transferable, although the right to transfer is often more or less restricted. So today in the morning I buy the shares, and the next day I can buy share. I can sell it. Means I can transfer to anyone. It is a So it is transferable, although it may make it. Now we'll see the what are the characteristics of a company. Characteristics of a company. The first is the foremost important, that is a registration. Without a registration, the company cannot run it. So it made the mandatory under the Company Act, that is a 2013, for any company to come into existence in India. If whatever the company come, if they want to run it in India, they have to make the registration, that is under the Company Act 2013. The next characteristic is separate legal entity. Separate legal entity means there is a distinct from its members. A company enjoys the right to own and transfer any property it's like. Anyone. And no member of the company in no case and at no point of time it is considered as the owner of its assets or the property. Moreover, a company can sue and be sued in its own name only. The company, it will be sued by on its own name. Individual members of the company are in no way parties, either contracts or cases pertaining to the company with the outsiders. So further, there is a court of law in every country. It is incorporated, just like a natural person. And being an artificial person, the company cannot be a citizen and hence cannot claim the right to vote in the country of its incorporation or elsewhere. If it is not given any incorporation that is ready to start, it cannot claim the right to vote, that is being in a artificial person. Next one is a perpetual existency or succession. And the company, as per the when company comes into the existence, when it come into existence, as per the law, it continues to succeed. That is perpetual. Succeed perpetually, unaffected by the fact of any death. If anyone death or insanity or insolvency, if any person from the company, if he die or he is in a loss or he become insanity, it is unsound or etc. So in that cases, are all its shareholders thereafter till it legally goes into the liquidation or wind up. If anyone, it's anything happened unaffected, will not be affected to anyone. It will be continued. Is it clear? And the next one is a transferability of shares. So that it is a freely, it can be transferred. That is a stock of exchange without any contact, without any concern of the company concerned. So without the consideration of the company, you can, without any consent of the company, you can transfer your shares to anyone. And there exists some restriction on the transferability or whatever that is transferability, that is existence of the shares, whether it may be in case of private company. Next, it is a limited liability. A limited liability means when the liability of a members are limited to the extent of any unpaid amount. If the amount is not at all paid, that is so when the liability of a member is limited to the extent of unpaid amount on shares, which are held by him or her in the company on the date of enforcing of such liabilities. So which may be either during the existence of the company or on its winding up, means liquidation. So either they can be the such liability, they can wind up at the time of the liquidation. They can have the such liability does not arise when the shares are fully paid up. Only the further liability which is rest on the members, not at the extent to his or her personal property as such. So here the limited liability, when it is given the limited liability at the time of the company only, they will be taken the personal properties to the extent, whatever the extent they have given the permission. So it is a fully or it is a guarantee, means at the time of the winding up, they can take up the whole liability, or only the amount which are they have invested, only that amount liability they can. So such restrictions they'll be given for the rest of the members, not or that extent to his or her personal property. And the common seal, it is a separate legal entity where it is given for its member, independent of its member. The company, whenever enters into a contract, uses a common seal. Means seal is nothing but name of the company is engraved on which name they have given the made that is registration has made. So, and its official signatures to sign on the same. So signatures, everything, the common seal. If suppose I am the member, so I have given my signature, common signature. In the bank, my signature will be there. Suppose if they say that, no, you will not be existed as a member. So, but the common seal, my signature, and commonly it is given for whole. Without my signature, the bank will not approve any check or anything. So that is a person is a natural person. It cannot sign physically by a natural person. Only the stamp as its official signature to sign on the same. Since it cannot sign physically like a natural person, the law has given the above privilege to the company to sign all its official documents with the common seal. Seal means, no? Whenever you go into the office, or when you, if you are working, suppose if you are studying in one college, what is the common seal of the college? If you are at the time of the hall tickets, when you are taking on that, they'll be giving the seal. Means that is shows that you are belongs to that college. That is witnessed by the two office directors to make such documents enforceable by the law of the country. And next is a delegated management. In this, it is autonomous, means the company is autonomous, their own rules and regulations. That is self-governing, self-controlling organization in its itself. Means they will not allow the other people to come and make the govern or control their organization. They themselves. It is comprised with a large number of shareholders. Means everyone, thousands of the people, not just as autonomous, it is the only controlling organization. So large number of shareholders who cannot collectively participate in the day-to-day management. That is, whatever the efforts it is going on, they cannot come and they cannot give their suggestion. So this is actual control, and the management is therefore delegated a group of a few representatives. That is properly we can say that board of directors, and officially elected by the shareholders. They will be elected in the general meeting. So this board of directors, they will be looks after whatever it is a day-to-day workings, and what are the business affairs of the company. Means whatever the things will be goes on, that all will be seen by a group of people. That group of people will be elected in a general meeting, so that every participant or the management affairs, everything will be seen by the board of directors. That is a group of people. So in the next class, we are going to start with the kinds of companies. So now I'll stop with this. So this is what is a company. what is a company, what is the meaning of the company, what is the definition of the company, and what is characteristics of a company. And I have given that what are the adjustments in the entries, how you will be posting in the profit and loss account, and how you will be writing in the balance sheet. So that's one. I have today's my class. I'll be ending today now with the characteristics of a company. So in the next class, I'll be going with the types of a company, characteristics of a company, and the kinds of company. These two are very, very important for your examination point of view. So now I'll stop my class. So next week we'll take with the kinds of a company.